I think we'll go ahead and get started. Thank you all for turning out. Apologies for getting started a little bit late, but just the logistics of everybody getting from first service to donuts to here, we wanted to make sure we had time. So just to introduce myself, my name is Mike McAllister. I'm currently a deacon at Plymouth, and I'm currently serving as a treasurer. And today's budget information session is to take us through the fiscal year budget budgets for calendar year 2026, fiscal year 2026. So just to introduce what we're going to go through, we'll start today talking briefly about the budgeting process, how we got to this document, this material that we're presenting. We'll spend a moment talking about the philosophy and outlook that we have on budgeting, and then we'll go into some of the numbers. If you probably all received a handout on your way in. That'll give you a kind of an up-close version of the same numbers that we're going to be projecting on the screen. And then we'll take time for questions and comments from the audience. I'm happy to make this interactive. It is being streamed online and recorded. So if you have a question or want to make a point, I would ask you to try to use a microphone if you can. Or otherwise, if you don't happen to make it to a microphone before you want to speak, I will try to summarize what I heard as a question so that the remote participants get the gist of it as well. But if you have questions as we're going along, I'm happy to kind of take interruptions if you like, or we can save them until the Q&A period when it might be easier to get to the mic or have the mic brought to you. Okay, so let's talk a little bit about the process. So the budget as a document is, I really want to call it our budget because it is the work of many different individuals and groups. We have inputs in this document from our Director of Operations, David Langamo, from myself, from our accounting staff, from All-in-One Accounting. It also reflects input from the board, a lot of input from the Board of Finance and Administration, which makes a fair bit of sense. They're focused on the financial and administrative operations of the church, but there's also a number of groups within the Board of Finance and Administration that provided significant input, review, and expertise on the budget. So we have there's elements in here from the Facilities Management Committee of BOFA. There's input from the Human Resources Committee. There's also input from the 5-year plan work group, from the Stewardship Task Force, the Investment Committee. So there's lots of. While I'm the one speaking today, this reflects the work of many individuals, and many of whom I see here in the room today. So I thank you all for attending and joining. One of the other things that this budget has tried to reflect is Plymouth in this last 6 months has really been going through an exercise to improve the transparency of the financial operations here at Plymouth. And one of the ways that this has been realized is the accounting team has been producing, I think, on the order of 20 to 30 different reports each month. It used to be that the financial reports, when they were released, would go to me and would go to BOFA and would go to the staff, but they didn't go much further. And what the accounting team helped us realize was that we have a number of budget stakeholders in the form of all the boards. All the boards have a budget. Many of the committees or initiatives have some budget. And a number of different staff members have responsibility for certain line items within the budget. And so part of the effort for improved transparency has been to get regular financial reports to all those different groups of stakeholders. And in the process, and for some of them, this was the first time that they realized, the first time they actually had visibility to what was in their budget, where they were within the course of the fiscal year. And so it was a big step forward to begin distributing that information. But what we also did in this year's process was we began asking for feedback. What do boards see as a need for changes in the coming year's budget? Now, this is a new process. It's not, I say, well-oiled and well-practiced with years of institutional expertise or institutional habit built into it. So we got some input, but not from everybody. But it is a distinct improvement, I think, over where we were in past years in terms of sharing information about what's in the budget and asking for input about what should be in the budget. Now, at a high level, just to set the context, the budgeting process really kicked into gear in October this year. So October is when September financial reports become available. So middle of October, we had the financial reports. We could see what our account balances were for the draw amounts. We could see 9 months of actual expenses through the course of the year. We could see how things were trending compared over those 9 months to what we had budgeted in 25. And so the process really began in that October period with the September numbers. And what we were able to do with that was bring a draft budget to BOFA during the normal BOFA meeting in late October, and had a good conversation for quite some time with BOFA, getting their input, getting feedback, taking questions and suggestions. And what we did with that in the subsequent month, in the latter part of October and into November, was really work towards that final draft of the budget. So incorporate the feedback, incorporate new numbers that came in the form of commitments to the 5-year plan working group. We did incorporate the October financial reports as well, and kind of where we were in the course of the year with income. And so with that information, in the October meeting, the board worked and basically recommended, kind of tweaked the numbers during the meeting and made a final recommendation. And then that recommendation went to the deacons for their December meeting, where the deacons adopted it, approved it, and recommended it for presentation to the congregation. So what we're all building up towards is a annual budget meeting that's scheduled for next Sunday, about this time, actually at noon, which will be at the time at which the congregation will be asked to adopt the budget. This is a little bit different than last year. You might recall that we were delayed. So if you're thinking back to yourself, well, when did we last hear about a budget? We actually last talked about the budget in June of 25. So we were delayed in getting things, in getting through all the work, dealing with turnover and changes and everything else that was going on in the course of last year. But this is what we're seeing this year is closer to what we intend. We intend we have our annual budget year is aligned with the calendar year, and the goal is to present a budget at the beginning of that time period for use during the full fiscal and calendar year. Okay, so let's just talk briefly about the philosophy and the outlook that we have here. So budgeting overall is a collective group set of decisions that we're making, right? What do we choose? What is the congregation willing and able to support? What do we think is going to happen as we look forward? What trends do we see? What's going to change? What don't we think is going to change? And a big question is, how do we, for the resources that we have, Plymouth is in a very blessed position to have a significant set of resources already. How do we tend to those resources? Do we spend them? Do we preserve them? What do we prioritize? And a key thing that we hear as we talk about within the boards and within groups, and especially with the efforts and initiatives of the 5-year plan working group, everybody's asking, when we make certain budget choices, what consequences is that going to have? And are those going to be, are they going to be how are they going to reinforce on each other, on themselves? If we spend money this year, that's money that won't generate earnings in the future. And so how do we try to balance all those things? So one key point I'll make is that back in 2023, the deacons and BOFA agreed on a 5-year plan framework. And that terminology is becoming a little bit confusing, because we also talk about having a current 5-year plan work group. But if I talk about the 5-year plan that we set in 2023, it was around what ramp down did we want to work towards in terms of reducing the reliance on funds drawn from our investments. So we felt like in 2023 we were at an unsustainable level. We wanted to get back down to a sustainable draw. And so we set a set of figures. The first year is a 14% draw. The second year was a 12% draw. This year is the third year, and we're on a 10% draw, is kind of the planned figure. Just to continue painting that picture, next year is intended to be a 6% draw, so significantly a bigger step down from this year to next year. But the intention of that 5-year plan was to return Plymouth to an operating model where our income and our expenses were balanced and sustainable for the long term. And so we are working on that. We still have work to do, but that's the context. Some of the numbers that you'll see here in the coming slides use that 10% figure as a benchmark, and that is the figure that we set back in 23. And just to draw attention to that last point, in order to get to 6%, and in order to get from 14 to 10, we've had to make significant changes in terms of the expenses and in terms of the revenue. We've got additional work to do, right? To get down to 6%, we have to continue that work. And I'm happy to report that the board and the church staff are well engaged and looking forward at that. And so I don't have any concerns at this point, but it's just want to make sure everybody realizes that there is work to be done still. Okay, so I wanted to mention a few key points that kind of set the context of the overall budget. So one thing that we've done in past years, ever since I began paying attention to the finances and ever since I became treasurer, the draw was shown as a line item within our income or in our revenue section of the budget. And it makes some sense because it does support the expenses that we have, and we tried to show the income and the expenses balancing. But it serves to kind of confuse the issue if somebody looks strictly at that revenue top line and sees it matching the expenses top line. It clouds the fact that there's not really a match. The two don't equal. The two aren't balanced. And so in consultation with the board and with our accounting team this year and some other experts within the church, what we chose to do is to not show the draw as a revenue figure. So what you'll see here, both for the 2026 budget as well as kind of the restatement of what we showed for 25, that line item is now gone, and what you'll notice instead is that the bottom line, the balance, the total figure on the statements shows a negative number. Now that number is in effect the draw, and so it's still there, it's still visible, and it's just presented in a way that we think it makes it clearer that we have a gap between our income and our expenses. I actually touched a little bit on the second bullet point already in terms of the 5-year plan, but what I can share and emphasize is that with the calculations that the Board of Finance did in their meetings and the motions that they adopted, we set the 10% draw basically amounts to $610,000. So that is the figure that if somebody asks the question, what is the draw intended to be this year? $610,000 is the amount. The board reached that amount. I think my microphone is dropping here. The board reached that amount through through careful consideration of what the balances were, as well as setting aside, removing some of the balances that were intended to be spent this year. So I won't drag you through a lot of detail there, but just suffice it to say that $610,000 represents kind of what the board felt was the right amount based on the current balances, setting aside what's not available to be spent, setting aside also what's planned to be spent through our capital budget, which we'll also get to, and was kind of with careful consideration, that was the amount that they reached. And then what I'll also mention is the third bullet. This, when you look at the actual budget, I mentioned that the draw is intended to be $610,000. The gap between revenue and expenses right now on the budget is shown as $638,000. So there's a $28,000 gap. When we did the budgeting process last year, the board closed that gap in its meeting, I think reasonably so, by kind of carefully, or in the meeting, identifying some additional cuts they wanted to make and some additional revenue they wanted to project. Instead of the board taking that action this year in the moment, in a meeting in November, the discussion, my sense of the discussion was that the board was comfortable that was a modest amount in the grand scheme of things. it amounts to a little bit less than 1% of the expenses, less than 1.25% on the revenue side. And it was a figure that, instead of the board trying to take a decision right there in that meeting, that cast in stone kind of how the gap would be closed for the coming year. The board's going to ask management, and the board as well will pay attention to that gap through the course of the year, and will work to close it through actions in the course of the year. So what that means is that if the board, and the director of operations and I as treasurer will be looking at that figure and working to bring us in at that 610,000 or better. But you'll see that as a gap on the charts here. Okay, so let's jump forward to the revenue side. The coloration here is a little bit not favorable necessarily, but as you're looking at this slide, the numbers that we're looking at, the numbers that we're proposing for adoption, is the right-hand column. The header says Proposed 2026 Budget. Right now, we're presenting that budget in comparison with what was approved for 2025. In past years, I've liked to be able to show where we were with actuals for a comparable period, but the difficulty we have right now with the timing of things is that our actuals for 2025 aren't available. Like, the accounting team needs time to process that. Those reports are going to be available later in January, and so I felt like it was confusing to try to show a period of, like a 12-month period of actuals. It didn't quite overlap with either the budget or what we're balancing against. But what you can see here on the revenue side is that we are forecasting about $2.3 million of revenue at the top line. That comes from about $1.9 million of giving revenue. And that giving revenue comes from the response, individuals kind of either pledged or unpledged giving that occurs throughout the course of the year. It also comes from in this case, we did take input from the 5-year plan working groups. They have gotten a lot of responses for the state housing tax credit, with individuals making kind of estimates for what they thought they would be able to donate as a result of that initiative. We incorporated some of those figures in here as well. And we incorporated, at the time we were doing the budgeting, this was before we happened to have our Consecration Sunday weekend and started to see responses coming in. So we didn't have any actual numbers there, but what we did was we assumed at the moment about a 2% increase over giving income from 25. Now, I'm happy to report that based on the numbers that we're seeing from the Consecration Sunday response so far, I feel very comfortable that we'll make that 2% figure. The response has been really favorable. We've seen, by some measures, a 3x or even greater response, more than that 2% amount. So I feel like while we had to make some estimates that are baked into the budget, I feel already that we're off on a strong foot with the response from the pledge campaign. One other piece of uncertainty, though, that number estimating 2% over giving for 2025, again, this is the timing issue. We hadn't seen, we didn't have December results in. We just had the estimates for December. Now, December happens to be, in terms of church practice, December is our single largest month for receipts from annual giving out of any of the months. If we just divided it evenly, an average month would be about a little bit over 8% of the course of a year. Our Plymouth's past practice, we've seen giving in the month of December be approximately 21%. So the uncertainty we have from that is significant. We're hopeful that it's going to come in. The numbers that we had in our budget align with what we saw last year, but we don't have the booked numbers yet when we had to do the budget. So there's some uncertainty there as well. Hopeful, but we'll see. We'll learn more. In any event, the board considered all of this and adopted the 1.9 million figure as our estimate for giving income. The other big change that you see here is you'll see significantly increased amounts in our other income section. This is in large part due to work by our new director of operations, by JT, by members of the lay leadership as well, in coming in and realizing that Plymouth had opportunity that we weren't capitalizing on. Many of the leases with our tenants had not been updated in a number of years. Those lease rates had not kept pace with inflation or changes in the market. Our event fees for use of the theater, for example, had not been adjusted in quite some time, and so the church staff with their working with tenants basically negotiated either negotiated new rates new lease terms, or set new rates for things like uses of our space that contribute to this significant increase in this other income section. So it does show a significant bump from where it was last year, but it's the result of it's kind of expected, right? Or maybe I should say hoped for. We had hoped that somebody in director of operations role would be able to pay attention to this area that had not received attention for some time, and we did that, and we're seeing a strong result from that. Yes, ma'am. No, our tenant population is staying the same, and there's a relatively small number of tenants, true tenants, and I don't think we anticipate that the theater rates are going to cause us to lose any theater usage. We feel comfortable with this, and I think it turned into from my vantage point, at least with some of the tenants, it turned into an opportunity to talk to them about our collective future. We are in this with our tenants. Our tenants are in this building with us, and one of the things that we, I think, have been able to start doing with some of our tenants is to talk to them about our future without these changes isn't sustainable, and that has an impact on them as well. And so while I think nobody wants to have to confront that, it is something that business managers and our institution has to grapple with and figure out the right way to do that. So we're hopeful there, and there is still additional work being done in that space. As I mentioned, trying to get to that 4%, trying to close that additional 4% gap in the draw in the coming year. One of the things that's still actively being pursued is additional tenants, additional uses for the space, and so that's something that I think we'll continue to see more of, and that may actually look like new tenants from our perspective. Okay, jumping forward to the expense side of things. So on the expense side, this is largely we did not need to make. How do I put this? We did not the changes that go in on the expense side are largely a result of understanding what it costs to operate Plymouth. We did not eliminate any positions. We did not cut any ministries. We did not need to make any kind of dramatic adjustments. If anything, I think some of the things that we do see in the expenses is a greater contribution towards the maintenance and repair of our building. That's one line item in the budget that's gone up significantly from last year to this year, reflecting the fact that last year was given that we didn't pass the budget until the midpoint and we didn't have a director of operations helping drive building changes. We had a lower kind of institutional capacity, but also this year is getting back to where the facilities management committee tells us we should be in terms of what it costs to maintain the building, to keep the lights on, to keep the light bulbs replaced, to keep the parking lot in good shape, to keep water out of the building, things like that. So what the numbers that go into the expense side were a result of kind of careful scrutiny, looking at the actuals, looking at past budgets, seeing how groups that are responsible for spending those dollars, whether they were spending them or whether they were not, if they were they exceeding for reasons that we needed to accommodate, or were they exceeding for reasons that we can kind of rein in on a little bit. But this effectively shows like a lot of care went into kind of looking at what are these figures and what should they be. A couple of changes that are worth kind of pointing out, or maybe worth noting. In last year's budget, we incorporated a cost of living adjustment and some salary adjustments for staff that were necessary to kind of keep salaries in the right point in the market into the individual budget line items. And then we had some unallocated salary costs that were set aside for use in a Christmas bonus this year. You'll see that last line item, that unallocated salary line item, is higher this year. The reason for that is that while we're keeping the budget for Christmas bonuses at the same, the board felt like it would be useful for church staff to have flexibility in determining kind of how to administer that salary, those salary changes. So instead of pre-baking them into the budget, what the COLA amount was going to be, who might need accommodations in the adjustments, and in which kind of line item they might fall into, the total dollar amount was left as in that unallocated salary line item. So we do expect the church will spend it. We expect that in our normal process, it's usually in July each year that we look at and try to accommodate a COLA and or other salary adjustments. But you'll see that figure here. It looks like an increase, but it's really the same kind of basis, just left in a place where it's for the church staff to manage, as opposed to trying to bake it into the budget process. And then, as I mentioned, all the non-staff items, the work here is really just kind of going through line by line, looking at the utility bills. The utility bills came in higher this year than were budgeted, so our 2026 budget accommodates the higher utility bills. If we see that there's an opportunity so if there's some funds being unspent, for example, we've pulled back a little bit, but effectively the amounts in the other expense sections just reflect the kind of the nitty-gritty work of getting to totals. So with this page and the prior page, this amounts to what we call our operating budget. This is what it costs to run Plymouth. And I'm going to shift slightly on the next slide and talk about the capital budget. But before I jump, are there any questions about the operating budget? Kathy?
Hey, Mike, can you, on the balance line, can that be changed to show the draw being what the draw is going to be, and then show either a gap or an overage? Can you split that up?
Yeah, I think we could. I wasn't able to kind of make those numbers work with the mechanisms that we had available. So that's why I tried to kind of call out the gap and the bullet points. And sorry, for people watching, the question is, could we adjust the presentation of the budget to show that the draw of 610,000 and the gap of 28,000? And I think it's a reasonable request. I couldn't make it work in the slides and the tables at the time. So I've called out the draw amount as a separate element, but it is something we can certainly try to improve the presentation in the future. Another question?
By the time we have the budget past this, will you have the missing figures?
So the question was, but when we pass the budget on January 11th, will we have the missing figures? And actually, no. So the financial reports that give us the full results from calendar year 25 aren't going to be available until about the third week of January. It's just the normal report production process for closing a month takes several weeks for the accounting team to get through.
Will there be any revisions as a result of those figures?
So the next question was, will there be revisions as a result? And what I would say is, we're absolutely expecting that the church staff will create forecasts in the course of this year. So while the budget is going to be approved by the congregation and set in January, in order to manage and in order to see where we are and are we on track or off track, we'll be looking at numbers each month. So the accounting team produces a regular reporting package, which shows kind of the budget that was approved and the actuals and what the gaps are between those. And then as well, a new practice for Plymouth that we're looking at using this year is to create forecast, it's almost like a mini budget, but without congregational approval. To say, okay, once we're at June, for example, where are we? and what's likely to happen in the next 6 months, and what changes, if any, do we need to make. So that will feel like a budget. It doesn't have the blessing of the congregation, so it's not an approved budget, but it gives the management team collectively, the board and the board representing lay leadership and the church staff, a basis on which to talk each month. Are we on track or off track? So what I'm expecting to see as we get the end of year 25 numbers, as we get to a point where we've got the giving income from the stewardship campaign fully baked, those numbers will feed into a forecast, and the management team will be able to see what those numbers look like. But the budget is, because the budget's approved, I don't expect that we won't change the budget number, if that makes sense. We'll have two different forward-looking sets of numbers. Don? Oh, sorry. I hear you. That's a good point, and I think that's something that the board has wanted to do, is to take a mid-year point, maybe during the annual meeting, and share what's happening so far that year. So I think I don't think because the budget happened so late last year, we didn't give a mid-year point, because that's when we were actually approving the budget. But I can say we'll work towards this year's annual meeting to include kind of a midpoint update on where the finances stand. Don, you had a question?
Yeah, to kind of expand upon that, I would suggest that BOFA and their supporting committees work on a plan where there's more publication of those stepping points through the year to the whole congregation. I think knowledge gives us comfort.
Mm-hmm.
And so if we could get, maybe a quarterly snapshot of this information about this is where we are through the first quarter, with the end of the year reports and first, second, third, and fourth quarter, I think it would help the congregation's comfort level with the financial status quo of the moment. So I would suggest that be considered more publication of some of those interim figures.
So just to recap for the streaming audience, Don was suggesting that there be greater communication, more frequent communication from the board and from the church on the status of the finances. And I can briefly respond that I've seen exactly that same sentiment from within the board itself. And I saw Sue react. Sue's been one of the board members talking about how does the board make that or do that communication. And so absolutely, I think there's your points are well heard, and there is energy to try to improve that communication.
I'm Rick Simon, I'm chair of the board. Point well taken. And do that. The other thing we talked about just briefly.
You want to use the mic?
Oh, sorry. Yeah. I always criticize people saying I have a loud voice. The other thing commitment to do that kind of reporting on the part of BOFA. Secondly, Mike and I had a brief conversation the other day as to whether we should, for next year, have a vote on the budget in February so that the numbers are in on giving and the expenses. So that's another consideration for next year to address what the concern you raised. Now, where are we? We don't quite know when we vote on this. So, thanks.
Kathy, I think, had her hand up earlier.
Mike, you said you won't have these numbers until the third week of January. What do you have for where we are as of November?
So the November numbers are reflected in here. So when we did the biggest uncertainty is the giving income side of things. So when the BOFA meeting happened in November, we had giving through October, and we incorporated that estimate at completion. So basically, October giving, actuals through October plus estimates for November and December, and use that as the basis. So it did reflect kind of where we were in the course of the year.
And I guess the second part to that is, of our total giving. Do you anticipate that if we come in at that 21%, that 690 number, that's what the 690 number is going to be?
So that's a bigger, so the question is the 690 number, like is the 690 number from the budget that we passed in June, is that accurate? Are we on track for that? And I would say that the board's working through the details. Right now, we're off track on that. Now that said, the amounts that we're off track for things like I mentioned, utility expenses as an example, like the amount that we budgeted for electric has been below what we've seen for actuals. The amount for accounting expenses has been a lot higher than what we set in the budget. So where we see gaps in that, we have accounted for those gaps in the 26 budget. But the 690 number, we'll see when we have the full year financial reports. But I would say at the moment that we're not on target at that number right now.
And the 690 number is the 12% drop.
Correct. That's the 12% drop.
So the anticipation is that there's going to be more of a drop.
In terms of how we manage that cash, we look like we're going to be overspent or under on the revenue side, one way or the other. Ann, you had a question?
There's a marked increase in the 2026 budget for education and outreach. What's involved in that? I have no idea what that increase is.
Yeah, sorry, let me find the right slide here. So in the salary, so what Ann's asking about is in the education and outreach, kind of the approved budget was about 115,000 and for 25, and what we're looking at for 26 is 149,000. That is not actually a programmatic change. That is a change in the way the accounting team was booking certain individuals' expenses and salaries between these different column departments. So there's no actual change in staffing. It's just where are those costs showing up? So the personnel are the same, the number of positions are the same. It's a difference in the way that the numbers are appearing in the tables, not a programmatic change.
Can I thank you? I have two questions. First of all, do you have a certain time of the year that you look to see how pledges are coming in? Like at the 6-month point, it's like, I think we're right on track. Is there some consistency year to year? And then my second question is, how do our investments, that is stocks, that sort of thing, how do they play into this?
So the two questions, first was on how are we tracking pledges? I will say that I don't think Plymouth's doing a great job today of tracking pledge income, but it is an area of expertise for our new director of operations, David Langamo. It's an area he's had a significant role in managing giving income in other organizations he's worked in, and I've seen him anecdotally like chomping at the bit to bring some of those improvements here to Plymouth. So I feel like we see the giving income as it comes in, but we don't have a very sophisticated way of seeing, are those just planned gifts that arrived on time, or are they gifts that we didn't expect and that arrived early? And the difference between those two things impacts what we should be projecting at the end of the year. We're not very sophisticated on that today, but I think that we are going to be improving on that in this coming year. On your second question about managing the investments, there's an investment committee underneath the Board of Finance and Administration that works with our financial management company, and there's the amounts that are there. There's kind of a close cooperation. The amounts that are in the investments and kind of what they represent are included in each month's financial reports, which go to the board. The investment committee is talking to the investment manager about, and the accounting team is also talking with the investment manager about expected needs of cash in the coming periods. So there's a lot of work that takes place with those groups on an ongoing basis. But right now, it's effectively the dollars that were in what we call the commingled investment amounts to about $7.5 million today, from a variety of different kind of sources and with a variety of different, either some are restricted, some are not. But that amount is what we effectively call our commingled investments, and it's managed by those different groups at Plymouth. Okay, just in the interest of time, I'm going to actually, we've got about 12 minutes left. One thing I wanted to jump forward to briefly is to talk about capital expenditures. So those of you that have been paying attention and remembering these details year over year, we haven't presented a capital budget the last couple of years. In the most recent period of time, we didn't present a capital budget because we were effectively 6 months through the year. We didn't have a director of operations at that moment, and we didn't have the institutional capacity or projects underway to really execute on capital projects. I'm happy to report that situation has improved greatly this year. We've had a very active facility management committee, which has been thinking about what projects are needed to keep Plymouth's capital estate, our physical plant, in good shape. And they've been thoughtful about which projects do we do, in which sequence, which ones do we do this year, next year, the following year, and how does that all how should that reflect on what we do in our current year? And so the amount that was brought forward for the proposed budget for capital projects this year is that $412,500 amount, and that represents just significant maintenance projects. So within that amount would be one of the oldest boilers in the building would be replaced for a significant portion of that $412,000. There's a number of other projects there, and I'm not able to kind of recap them all. But the facilities management committee brought it forward. The board approved it, and this is the number that we're presenting in the budget. One thing that I'll also mention is that you're going to see in the coming year work to repair a significant portion of the roof that was damaged in the hailstorm a couple of years ago. That's about a $700,000 project. It was covered by proceeds from an insurance claim that Plymouth received. And so I'm showing it here. I don't know whether that technically needs to be considered as part of a capital budget or not, but just in the interest of transparency, when you see that roof on the work, that's not covered by the $412,000. That's covered by the insurance claim for another $700,000.
Is that $700,000 part of that 1.7 million?
$700,000 is part of that 1.7 million. Yeah, that was those monies were kind of set in that account. Yeah, and just jumping down to the bottom that you'll see here. So a couple of things in terms of the overall that $1.7 million does reflect kind of the capital building fund balance as of September 30th. Right? Keep in mind that when we did the budget, we started with that September baseline as our basis. There are some amounts that are continued to flow into that amount. So Plymouth has received some funding or some compensation from some pandemic era programs. Some checks were received after this point. The board has recommended that those go into the building fund to kind of continue building that up. That amount's not reflected there. There's some additional proceeds that are likely to come from a bequest that the board is also inclined to recommend and go in there. So yeah, this number, the 1.7 million, is as of September with puts and takes that come over time. So any questions on the capital expenditures? So the capital expenses don't show on the operating statement. And that's why the revenue and the expenses reflect like operating costs. Capital projects will show up will show up as transfers between the accounts where they're covered by and the line items where they're spent, but they're separate from the operating budget. They're separate from the operating budget at the moment. They don't show up in the operating budget. They will show up on the financial reports as credits and debits in the appropriate lines. Question?
Your last point, the capital building fund balance remains at 1.7 million, sitting within the overall investment balance. The overall investment balance, is that what we're drawing down by 10%?
Yes, the 7.5 million is what we're talking about when we say the commingled investments. And when we talked about the basis on which the draw was calculated, it was off that $7.5 million figure. I've actually got a slide that I can, kind of a support slide I could jump to. So this is the view that the board used in kind of reaching that $610,000 figure. We started with the $7.5 million balance. We backed out the other amounts that were planned for capital expenses and for that insurance activity, because the thinking was we're going to spend it in the course of this coming year. We shouldn't use it. We shouldn't double count it as contributing to the draw as well. And we also backed out the restricted funds that have designations set for their earnings. So this is kind of how we got to that $610,000 figure. Don, question?
Mike, it might be helpful for folks to understand what qualifies within the BOFA parameters as a capital expense.
Good question. So Don was pointing out, just to talk a little bit about what is a capital expense. Plymouth's current definition of a capital expense is expenses that cost over $20,000 with an expected lifespan of 5 years or more. So, for example, like painting a wall or replacing some light bulbs would be on our operating statement because they don't have that long of a lifespan or they don't reach that threshold for materiality. The capital expenses would be things like building change, bigger changes like building changes and such. Kathy?
Mike, is the capital budget expense of 1.7 is not meant to, it's meant to be stable. Why include that in the total dollar amount to get the draw number? Because what I hear you saying is that we're not going to use that $1.7 million, but for building capital expenses. So why include that number to get into the draw basis?
So the question is, why would we leave the $1.7 million in there for the draw calculation? I would say it's a practice that we've had. It's a practice we used 2 years ago, and it's the practice we continued this year. The board talked a lot about like how did we reach this draw calculation, and spent some time considering it. I think there's probably room for further consideration there. There's and this is a brief aside, but there's funds that Plymouth has that are set aside for certain purposes that we don't think about, except we don't think about it when we calculate the budget in some respects. There's opportunity, and I think Plymouth in the coming year probably should revisit how do we get to what is our draw basis? Are we using the funds that have been entrusted to us for the purposes they were entrusted to us for? And we may have room to reconsider. But I think the direct answer to your question is we use the same approach we used last year, and there was some discussion, and probably will be more discussion in the future. Sue, I think you have a hand up. Thanks. So just in the interest of time, I've got time to spend, but if you're planning to make it to second service, you've got about 2 to 3 minutes. So I don't want to be responsible for a lot of late arrivals.